Dan's case, being an accountant, he can crunch the numbers on the spot. So I'm going to have him crunch away. So Dan, this development here, you've always reminded me, we are in a low rate environment. We're just not in as low a rate environment. And now that it's competition for those who want to invest in stocks but are leery because right now there's an alternative. Is this an alternative?
It certainly is, Neil, and you could see the impact that it's having on the market. I think your assessment of what you just went through for the viewers was spot on in terms of all the factors that we're seeing. Is 1.5% a big deal? Well, no, not when you look at it in a vacuum. But if you look at the trending and that 50% increase and the impact that has on the market where there's always uncertainty and the pandemic has really, shall we say, impacted people's thinking. If they have an opportunity to get out of the market and calm down a little bit, take away some of that risk, they're going to take it. That's exactly what we're seeing right now.
So, Dan, I'm wondering whether that is playing into this, that I know I'm maybe trying to be a little bit too Pollyannish here, but I see this sell-off as indicating all of that good news. And that's what they don't know to, appreciate or depreciate. What do you think?
I think that's part of it, Neil. And when you put this whole picture together and stimulus, do we need this much stimulus? No, actually, we don't. We need targeted stimulus to get more vaccines into arms. And by doing that, and we get herd immunity, people are going to get out more. We're already seeing that happen. Let's not forget, when we get to the warmer weather, people are going to start going out more. So there's a whole process here in play. Do we really need to take on more debt? I don't think so, although no one seems to really care that much about it. And we know the market wants more stimulus, but we just don't need it. The best thing that government can do right now, in my opinion, focus in on the vaccines and then get out of the way and let the market and the economy run itself.
Real quickly, I agree with what Dan's saying, Chris. Dan, when you see it that way, it hits you. Like, yeah, if this lasts a while, it could be tempting. So the question I'm going to ask you, is it going to last a while?
Well, Neil, I wish I knew the definitive answer to that. But what I think is happening here is you have people who are at least looking to diversify some of their investments. Let's get some risk off the table while we have the opportunity to do that. Now, how long is this going to last? Well, there's so many factors that go into that, Neil. We're really going to have to see what happens with the economy, what happens with stimulus, and of course, the vaccine driving all of this. And I think when we see those answers, it's going to give us a better idea of whether more people are going to look to move funds out of the market for a flight to safety.
If they're nervous about the stock market, would you tell them, all right, well, we'll look at bonds?
Yeah, at this point, I really would. And I think that Kristen was right. Over the past year, a lot of people have really been on the edge of their seat and watching all of the craziness that's been going on. And now that there's an opportunity to try to get some calm in their investment life, I would say to take a look at that. But you know something, Neil, what I also see here on the horizon, and I see the stars aligning, is the inflation factor. Because we are now starting to go in that direction. When you see Costco raising their minimum wage, going above $16, that tells me that those costs are going to start getting passed along to the consumer. And you've talked about lumber and commodities. This is starting to align in an area we're going to have prices going up.
All right.
And then how is that going to affect the investor's psyche?
Okay. Final word on that. That's what we don't know. We'll have more after this.